Hello, good morning, and a very warm welcome, everyone. We'll just give everybody a few more minutes to join because I see we have a few more in the waiting room that
Good
are now
morning.
being admitted.
Hello, good morning, everyone.
Good morning, everyone. Good morning, Judith.
Good morning. And maybe in the meantime, while we're waiting for everybody to join, why don't you let us know where you're calling in from today? And you can use the message function to let us know. Amazing. So far we have Denmark, we have Dubai, we have Saudi Arabia, Abu Dhabi, Dubai. I'm calling in today actually from Europe. I'm in Germany at the moment.
Nice. You have a better weather than we do, for sure.
Well, not today. It's raining quite heavily, but it's definitely a lot more pleasant right now, temperature-wise.
All right.
All right, excellent. Well, thank you very much for joining. I'll be admitting as people join, but I'm also cognizant of everybody's time. And I want to make sure that everyone gets the benefit. We also had registrations from the US and also some from Australia even. But those participants, they will likely listen to the recording. But those of you who are staying until the end, we've got a little bonus at the end. And I'm really thrilled that you are making the time available. So a very warm welcome to find and fix the revenue gaps in your business. I've been approached quite a few times to say, hey, Judith, we all have businesses to run, but how can we actually increase the profits? Which has then led us to run the first cohort, which started nearly 12 weeks ago for revenue optimization and best practices from hospitality that can be used across any industry. And today, let me just see here that this, yeah, focuses. I have to minimize the screen. And it's so nice to see quite a few of the familiar faces and familiar names. So thank you very much for your support and for joining. And I've had a couple of messages that some have to leave early, but that's okay. We'll be sharing the recording at the end, and whichever works for you, that's really important. But the key point here is that we find revenue clarity, that we're able to make better decisions, and ultimately that translate then into a stronger profit. For those who don't know me, my name is Judith Cartwright. I'm the founder and managing director of Black Coral Consulting. Prior to my launching my own business, just over 5 years ago, I was the global senior vice president of revenue management distribution at Curzon International, which is the management company opening up the Atlantis in Dubai. I looked after the Atlantis in the Bahamas and opened up the Atlantis in Sanya, and also managed the one and only brand across the board, and also Mazagan Beach Resort, which is also casino hotels. So from an experience perspective, lots of experience across destination resorts and also ultra luxury hotels, casino hotels, and the key is really across every single income stream. I've sat many times across both sides of the table. On the hotel side of things, presenting to the corporate office, sitting at the corporate office side of things, working with the hotels, but then also sitting in between management companies or hotels and dealing with the owning companies or the asset managers. So I really see, where the opportunities lie and then also where the pains are sometimes and where things have to be navigated. But what I've also learned over the years that it doesn't matter what experience you have, unless you really try and understand other departments and what everyone around the table is trying to achieve, you cannot build a total revenue optimization culture. And that was probably one of the biggest learning curves. And I've had the privilege to learn from two founders and entrepreneurs. One is Bill Heinecke, when I was working with Minor International, and the other one, the late Saul Kersner, where good was never good enough and really pushed us and the teams to really find the best solutions, and get the most out of the business, and challenged us that, even if you hit 90% or 95% occupancy, how much more can you do? Or if the restaurant was at full capacity, if the spa was at full capacity, if the casino was thriving, it was never good enough. How much more can we do? And that's really what's led me to explore and to always challenge the status quo. And that's now what I'm sharing with the clients that I have, but then also with the people that I have been mentoring throughout. That's also one of the items that I've had, and I've been very fortunate through my career, is that I had amazing mentors in my life and in my career. And that's also why, I'm now participating, or I'm a advisor at the Revenue Optimization Advisory Board with HSMAI, where we give back to the community. And we've also been sponsoring a student by, Evolving Women. For those that are in the UAE, might have heard, it's helping underprivileged women coming mainly from African countries find a career in hospitality in the UAE. And that has been very, very rewarding. So why are we here? Is taking a look at, is the business truly performing at its full potential? And whilst many businesses are generating a lot of sales, they're filling capacity, running promotions, and reaching budget targets, but the profitability and the margins are often still under pressure, and cash flow is under pressure. And that's also something that we have realized over the recent years. Whenever you have a crisis, the cash flow is king. Whether it was pre-COVID, the financial crisis, then we had COVID. Now we have the geopolitical conflict in the Middle East, which has then led to a worldwide energy crisis. And that has put a lot of businesses under pressure because of the profitability, and then also then the cash flows that are struggling. And the question that a lot of people are asking is then, are we generating revenue? But the question that we should be really asking is, are we generating the right revenue? And revenue is not a sales function, it's a strategy function. And then also just to show, a token of appreciation for you making the time joining this webinar, we've got something for you. So please do stay until the end. And it's not just about understanding where revenue leaks happen, but by the end of this session, you will leave also with a practical tool and exclusive opportunity for you to take the next step. So there will be something that you can implement in your business straight away. Now, in terms of revenue grows, but it's not always the profit that also grows. And more revenue doesn't always equal profit or more profit. At times we have higher acquisition costs and we have to spend more to win each booking, but that also erodes the net return. And you have to spend money in order to make money. It's the same thing. You couldn't just simply invest money in the stock market, or you could not just simply make money on the stock market by not investing. And that's always something that I do tell everybody that I'm working with. Yes, you have to spend money, but you have to spend the money in the right places. And for every dollar that you spend, you have to ask yourself, how much are you actually getting in return? Then you might have a low value customer mix. Not all revenue is equal, and some customers cost more to serve than others. Then at times we have excessive discounting, where we do gain the volume, but actually the margins are eroding, which is then also impacting the profitability. And then also at times we just simply have unprofitable channels, and we have a very high cost of distribution, that can quietly consume the contribution. And those are often items that we don't see until then the invoices for commissions are shared, because a lot of items and strategies are often done in isolation. So now where does revenue start to leak? And revenue leakages, they rarely arrive as a single catastrophic event. It's almost a sum of a lot of different elements that happen. So it accumulates gradually through repeated patterns of decision making, and that individuals seem harmless but collectively erode profitability. It could also be that something has been working in the past but isn't working anymore today. And that's why it's always important. It's important to take a look at the history and at the past trends, but it's also important to take a look at how things are changing and how things are evolving. And especially this day and age now, things are evolving so quickly. Consumer behaviors are changing. And that's something where the teams have to stay on top of it. And that's almost like where you do need to have a today team that runs the today, here and now, but also a tomorrow team that takes a look at the future and how do we have to evolve in order to stay ahead of the curve and ahead of the competition, and don't just do everything what's happening. And that's also something when, times get tough when it comes then to pricing and discounting. The first intuition often is, okay, what is the competition doing? The competition is reducing, or they launch an offer. So we also have to discount and we have to change our pricing. But that's where it's really important just simply to take a Control Alt Delete, that if it was a new business, and what is it that you can do differently to set yourself apart from the competition. So that's when we talk about pricing and discounting, prices that reduce too quickly, promotions that generate volume but not the profit. Those are then usually the ones that are the quiet leaks. So on the surface, it looks fine, but actually what comes down to the bottom line is often a very different story. The capacity and the allocation, whether you have then capacity that is left unused or sold too cheaply or to the wrong customers receiving the best availability. Then you also have the channels and and costs, high cost channels that might be overused because it looks good on the occupancy sheet, performance measured only at top line level, and not understanding what is the clean rate. So once we had a client, and I'll go deeper into that later on, and they were charging over $3,500 a night. But in the end, every single room night that was sold was not profitable because of all the inclusions that were added, given away, and also on how the cost management took place. And then one of the biggest missed opportunities are really the decisions and the forecasts. So that's then teams that are deciding in isolation, or then when you split it between sales, marketing, PR, revenue management, operations, and then also finance, and at times even procurement, is that when the decisions are taken, and not to anyone's fault, but because they're done in isolation, not understanding what the other department is working on at the moment and how items hit the market, that's also where it can impact. And then also when you take a look at forecasts that exist, but that do not lead to any action. A lot of times the forecasts are done and they're compared to the numbers, they're compared to the historical pace, the future trend, and then also how do we pace against budget. But if the forecasts are done without spotting the signals, without spotting the opportunities or the risks, the strategies, they cannot be adapted. And that's why then, one decision may seem small, but then repeated decisions, they can really change the result. And revenue doesn't crash, it leaks. So taking a look at this case study here. So that's where we were brought in, and it was a luxury 40 villa resort. They had high occupancy, but they had low profitability. And that was the occupancy that was strong, but it wasn't translating into profitability. And initially, when I started speaking to the owning company, then they said, yeah, but our occupancy levels, they're really good. So why would we need to have, different sales strategies? But then when we were actually speaking to the GM, they said, yes, high occupancy is there, but we're not, we're leaking profitability, we're leaking cash flow. So then we took a deeper dive, and that's when we found that the pricing lacked control. That was then discounts were given, or partnerships were initiated, and then it was an all-inclusive ultra luxury property, over $3,500 a night for the entry category. But then when you looked at all the inclusions, they were just simply costing too much money. And because there was no control, by the time you ended up with a clean rate, you had $150 less left. But it actually cost nearly $200 to service and to clean the room because of the location that it was in. Then sales were spread across multiple channels, but without any clear commercial strategies. The sales contract, a lot of the clients, was high margins, and then it was kickbacks, and then it was overrides that were given. And that's then where the whole profitability impacted. And then the revenue per villa remained low because premium products were part of the all-inclusive. Instead of having a certain level of premium products, but then still having the opportunity to upsell. And then the costs, the pricing hasn't really changed, but the costs were increasing. And that's probably also something that you have seen at your own property is we spend so much time on pricing when it comes to the rooms component, but how often do we actually take a look at the pricing for breakfast? And maybe it increases by the by the usual 3 or 5% when it comes to inflation and the rising costs. But how often do we actually look at what products should be changed and how can that be optimized? And then what we took a look at, we simplified the pricing structure. We kept it easy to understand for the consumer, but also for the partners that we worked with. We took a look at the channel mix to see where the optimization was. And then we also strengthened the control over how and where the villa inventory was sold. And that was only a 40 villa resort, but you have no runway. So every villa that you're selling to the wrong guest can have a negative impact. Every villa that you sell to the right guest can have a positive impact. And then within only 10 months, profitability was achieved. And then we achieved over 200% in revenue growth. We also got in more high value guests at higher average rates that also led to better guest satisfaction. And then it was a stronger profit. It improved the contribution and the sustainable commercial model and achieved a higher owner's return. So then when we take a look at the visible problems versus the real causes. So the problem that you may see may not be the problem you need to fix. So in commercial management, presenting the symptom is rarely the root cause, but diagnosing only what is visible, that's what leads to the short-term fixes. And that's very often when we say that we're shooting from the hips. So if we take a look at the visible symptoms versus the possible underlying cause, when you take a look at the low demand, that's a visible symptom because we can see that on our pays, on the spreadsheets, etc. And then when we look at what the possible underlying cause could be, it could be weak positioning or a very poor offer design. A visible symptom could be heavy discounting, but then the underlying cause could be the lack of pricing confidence. A visible symptom could be the high occupancy and low profit, but then the underlying cause could be the unprofitable mix or the channel cost. And another visible symptom could be the unused capacity, but then the possible underlying cause could be the poor demand visibility or allocation. Another visible symptom could be that we're missing the targets, but the underlying cause could be that it's reactive rather than forward-looking decisions. And all these combined is whichever strategies a team decides to do, it's all about how do you activate these. By just reducing a price point or increasing a price point, if the end consumer doesn't know about it, then they won't be able to convert. If the end consumer doesn't understand the why to stay at your property or why to go into your spa or why to go into your restaurant, that's also something where it doesn't convert. And that's when low demand is there, we really need to understand why that is and how this could be turned around in order to convert that customer. And that's how we achieve better results by diagnosing the real cause and not just treating the symptom. And that's why demand is not always the problem. Pricing too low or too early is then when establishing low rates before demand intent is understood trains the market to wait. And I'm sure that you have then also, certain brands or certain items where you know you can wait because you'll get a last minute great deal anyway. Where it's sold through the wrong channel, that's what, when we're prioritizing the reach over net contribution across the distribution mix. And it's important that the end consumer chooses how they want to book. It's up to the end consumer, and we all have different booking behaviors. Even myself, sometimes I book direct, sometimes I book through an OTA, sometimes I book through a travel advisor. It just really depends where I'm going and what I need. Sometimes I travel for business and sometimes I travel for leisure. And sometimes, I just simply go spontaneously, whether it's shopping or to the spa. But it's really important to understand how does your target audience book and how do you activate these channels. At times, we also accept the wrong business, that we fill capacity with low rate value segments that display higher contributing market demand. And that's also now something that in the UAE, some of the hotels are going through because then also now with the crisis, then there was pressure on tourism, or there is pressure on tourism. Weekends are busy, midweek is low. So it's really then also understanding now as things ease up again, is then how do you layer in the business? It's almost like looking at how do you build a house? You have a strong foundation and then you build the elements on top. Or when you build your pizza, you have a solid base, then you have the secret sauce and then the toppings on the top. But it's also important to measure the activity instead of the profitability. Tracking the occupancy or revenue without accounting for the cost of generating it. And that comes back to, every dollar that you have invested, how much of a return did you get? Sometimes you invest for visibility, but in the long run, you need to see that return coming. And that's why it's important to fix the decision and then the revenue will follow. So that was also one of my favorite and most rewarding elements that we've worked at. So that was a restaurant where we reimagined the revenue. And it was a very well-known restaurant that was generating very good sales, but profits, they were shrinking and, far too many seats were going unfilled night after night. And it was a very popular restaurant initially, but then it just started to lose the interest. And restaurants are always very difficult to keep attractive for the end consumer. But the root cause wasn't actually the lack of demand. It was a failure of commercial decision making and the pricing that left money on the table and the booking practices that wasted available capacity. So the challenge was that the pricing and the booking decisions were limiting the value generated from the available restaurant capacity. And then each service period represented untapped revenue. In the end, what we did is we redesigned the booking management system to fill seats more strategically. So we took a look at the meal periods, but then also how many seats were allocated. We took a look at how, who is the demographic and how should the tables be assigned. But then also beyond that, we trained the team to actually navigate the restaurant reservations team, and we redesigned the whole booking engine and we reallocated on how that inventory had to be filled. And then also when you take yourself into the airplane model into first class, business class, and economy class customer, we redesigned what that meant in the restaurant. Whether you just wanted to go to the bar and have drinks, that would become your economy class experience. Whether you were having a drink and a starter, or then if you wanted to go into a private dining area, then that was your first class experience, just as an example. And that then also helped to strengthen the pricing decisions across, all service periods. And then we maximize the value that we extracted from each guest and each seating. And then we unlocked the talent where we really trained every single person on the floor and behind the scenes on how to manage that. And that then resulted in a 45% revenue increase And then also then, the seats were filled 100% and we were able to turn the table several times. So the opportunity was already there, but it was better commercial decisions that helped to really unlock those revenues. So that one, apart from our fees, didn't require any additional investment, no additional covers, but really just the that whole strategy and taking everybody onto the journey. And that's why it's so important when we do take a look and when we do speak about the revenue optimization culture. So it's an organization that has a revenue optimization culture, does not treat commercial thinking as a specialist function. It really helps to hone everybody into every single decision at every level. And before any decisions are taken, the team asks a consistent set of questions that help to keep that profitability at the center of the conversation. So it's the revenue and the profit impact. What does this decision contribute and what does it cost? The capacity and opportunity, what limited resource are we committing and what are we giving up? Right customer, right channel. Is it the most valuable business we can attract for this capacity? And also very important for the long-term value and the long-term positioning. Does this decision strengthen or dilute the brand and business over time? And that's where revenue becomes part of every decision and not one department's responsibility. And that's why we have created the revenue optimization framework, so the asset revenue pathway framework. And the asset revenue pathway, it's not a theory. It also helps them to connect hotels, management companies, but also asset managers and owners. And it's a practical, repeatable commercial framework. It's designed to move teams from vague awareness of underperformance to clear, confident, measurable actions. And this is something that can be applied across every single business that has inventory and price points to manage, whether it's hotels, whether it's retail, whether it's airlines, whether it's casinos, whether it's restaurants, it's theme parks. That's where you learn to diagnose and understand where the value is lost. You prioritize the focus on highest impact opportunities. You act on making clearer pricing and channel decisions, and you monitor, track what changed and comes, and you improve and build stronger commercial habits. And that's where we build clarity before action and action before acceleration. And each stage builds on the last, creating a continuous cycle of commercial improvement. So where should we look first? And that's where the commercial underperformance does not usually hide in one place. And that's also what we touched on before. It distributes itself across 5 interconnected areas, and each capable of leaking value quietly and consistently. And that's when I want you to take a look at your own business now and take a look at the pricing, the customers, the capacity, the commercial culture, and then also the channels. And then ask yourself really honest questions. Are we pricing according to demand signals and delivered value? And does the team actually identify the signals? Are you attracting and prioritizing the most profitable business? Are we using limited inventory, time, and space as wisely as possible? And do teams consider revenue and profit impact in everyday decisions? And then also, are you actively managing acquisition cost and channel profitability? And that's where one of the items that we would like to give to you as part of joining this workshop today is we give you that revenue leak audit that you can do yourself. So you can rate your organization from 1 to 5 in each area. And it's not that you're aiming for perfection, but it's an exercise in commercial visibility. And it gives you a starting point on where to start with your team, but then also what other questions to ask, and then also to spot where the team needs more help. And the areas where you score the lowest are the areas that deserve your attention first for you to find the first fixes. And often you have very low hanging fruits. So take a look at the pricing, the customers, the capacity, the commercial culture, and then also then the channels. And then score yourself from 1 to 5. And then your low scoring area is the first place to investigate and the first place where focused attention will generate the fastest improvement, and you can brainstorm with the teams on how you can fix that. And then what does the scoring then actually tell you? So 21 to 25 shows you that you have a strong foundation, you have a good commercial pipeline in place, and you just focus on refinement, consistency, and continued optimization to maintain your competitive edge. Then 15 to 20 is then the areas to strengthen. Some practices are working well, but performance may be inconsistent across teams or decision types, and structured support will accelerate and progress. And then 5 to 14 is then where the revenue leak alert. That's where you really have to take a lot of action. Significant commercial gaps may be affecting revenue and profit. Prioritize a structured intervention, and then you will very likely deliver some good, meaningful results quickly. But take the time to really identify those revenue leaks, and then also take the time to build a strategy around it, and don't just think you have to fix it very quickly. And that's in your self assessment for your leak audit. That's a quick check-in and then to recover, where the revenue may be leaking. And then you can categorize this into the different risk levels. Do it with a team, assign it maybe also to the team, and distribute these across multiple team members within the same department, and then see if everybody comes out with the same scenario. Because it's not always like obvious in one report. They do sit inside everyday decisions around pricing, customer mix, capacity, channels, and team habits. But then once you consistently spot it, then you know how to fix it. And in the asset revenue pathway, in the 12-week seminar that we do, we go deeper into how to diagnose these gaps. And we go very deep in terms of how to prioritize them. We then also provide more tools for the teams on how to turn them into better commercial decisions. And then what we will do is then also in the chat, we're sharing the downloadable PDF version of this one so that you can distribute it amongst your teams. And what can you start doing now? So the structural change takes time, but commercial momentum can start today. And that's something, it's almost like with, you want to get fitter, you want to get healthy. You don't have to wait until tomorrow to go to the gym. It's something that you can start today. And these 5 actions require no budget, no system change, and no sign-off. And they simply require the willingness to look more carefully at the decisions already being made. And yes, we are all very busy, and very often it's difficult to find that time. But if you just allocate 10 minutes to take a look at, review one recurring discount and take a look at it, is it still necessary, or has it become an unexamined habit because it's something that we've always done? Identify one slow profit segment that revenue may look strong, but it is the net contribution. Is it worthwhile? Take a look at an unused capacity. What inventory, space, time, or service are being chronically underutilized? And it could be even within your within the lobby, within the gym, within the spa, within a restaurant, or even a storage facility that you have that might be underutilized capacity. It might be inventory that is not converting for rooms, or it might be a restaurant, where you have a certain lack of demand. And then review one high-cost channel, and then add one commercial question to every single meeting. What is the revenue and profit impact of this decision? And if you have strategy meetings that don't have an outcome, you didn't have a strategy meeting. Every strategy meeting needs to have an outcome. Even if you decide not to change strategies, that's still a decision that has been taken. Now, quick wins help, and the structure helps to sustain that. So individual improvements are valuable, but without an underlying structure, gains tend to become temporary. And that's also often when teams go to a workshop, then there is a lot of excitement, a lot of hype. But then the teams that drift back to familiar patterns, and progress becomes difficult to replicate or scale. And that's why it's important that you keep the momentum going for things that you're going to re-energize or energize, because without structure, the teams return to old habits, decisions remain reactive, opportunities addressed in isolation, results are difficult to repeat, and commercial knowledge stays with individuals. But with structure, decisions become clearer and faster. They become then also people wanting, and they know where to look. Teams become more aligned. In the beginning, you might hit quite a few bottlenecks or then also resistance from other departments, but it's building those bridges and the gaps, taking everybody onto the journey with you. Opportunities are then consistently prioritized, and people are then willing to listen and to give it a go, even though it doesn't impact the department. The progress can be measured and built upon. And then the commercial capability grows across the team. And more team members, they will come up with innovative ideas. And one good decision can improve the result, but a consistent framework can change the entire business. And that's then also we helped with, revenue optimization at a dog kennel. It was a busy kennel into a profitable one. So it was then full cages, long wait lists, but inconsistent margins and flat rates, freebies, and no profit visibility per pet meant being busy, but it wasn't enough. So we did the commercial health check. We took a look at the pricing. We built the value. We looked at the upsell strategy. We took a look at the underlying cost. We took a look at the weekly commercial pulse, and then we wrote the playbook. And that's really key because you do see that it does work across every single business that has inventory and price points. And you can be subtle about it. It doesn't have to be always just purely commercial, but businesses, they do pay salaries and they have to stay in place. And it makes my heart bleed when I see innovative operations of businesses that have to shut down after 5 years, or sometimes even later or sooner, because the foundation hasn't been built correctly. And that's why we have built the asset revenue pathway. It's a 12-week commercial decision framework. It's designed for leaders and teams that are managing limited inventory, time-sensitive demand, capacity constraints, perishable opportunities, and multiple revenue streams across any asset-based business. And we've designed this for, after having had many conversations at conferences or being invited. I was invited to become the strategic advisor for FIBO, which is the world's largest trade show for fitness, wellness, longevity, nutrition, and bodybuilding, because they wanted to bring the hospitality industry closer together because there are so many gaps. And at the same time, you have a lot of spas and gyms, etc., that are amazing, but they do struggle when it comes to profitability. And we've been approached by dog kennels, like I've just mentioned, by restaurants, by retail shops, anything that has limited and perishable inventory environments. That's exactly who it's been designed for. Time-sensitive demand and capacity constraint, and multiple or complex revenue streams. And what participants learn in this asset revenue pathway masterclass is that we help to find hidden revenue opportunities. We strengthen pricing decisions confidently, optimize customer and channel mix. We use capacity more profitably, and we build a 90-day commercial action plan. And that's really key. So it's practical, cross-industry, and built around immediate application using the participants' own business realities. And we're building an amazing community. So we have an online platform where then also the members that join, they can interact with one another. And also onto the platform, we do upload recorded videos in addition to the live sessions. They do get recorded as well. In the first 2 weeks, we focus on the revenue mindset and the demand. And even that, we had VPs join of revenue management, our previous class. And that was a big eye opener in terms of what that revenue mindset and the demand actually is. Then week 3 to 4, we focus on customers and forecasting. Week 5 to 6, we focus on pricing and capacity. Week 7 to 8, we focus on dynamic pricing and total asset revenue. Week 9 to 10 on channels and sales integration. And then on week 11 to 12, we focus on performance and the action plan. And you get to build your own 90-day action plan after these 12 weeks. Because, like what I said earlier, for every dollar that you invest in your business, you want to see the return. We also want to see our participants to see the return for the money that they invest in this masterclass. And participants, they receive live group sessions. That's a weekly live session with peers and with myself. We provide tools and templates for practical frameworks, business exercises using your own data and self-paced learning modules. Then we have the community and the accountability. There is peer discussion, guest speaker insights, and ongoing community access and support. And then at the end, we have the certification and the action plan. And that's over 12 weeks. That's where then the participants move from identifying the revenue gaps to actually building the commercial action plan. And results, they begin very early. By week 2, we've had a lot of success stories already. Then, of course, we also have special guests. We have in the past cohort, we had Stuart Grive, the Chief Strategy and Innovation Officer from Forbes Travel Guide. And those recordings, they will also be made available to the new cohort. And Stuart has also agreed to join again live. So then you'll also be able to ask him questions. And then we're also very blessed to have Dr. Mahala Garonasso from the Le Roche Institute in Abu Dhabi. And the session that she's done the last time was just truly amazing. And today's newsletter came out, and have a look that was posted on LinkedIn. But she has taught quite a big eye opener on how revenue management can be truly integrated with finance. But have a read through the newsletter. I truly enjoyed her session. And then also for those that are signing up today, for the first 10 signups, I'm going to throw in a private commercial diagnostic session with myself. That could be for your department, that could be for your business, where we do examine a challenge together. We work through one current commercial challenge in depth. We identify the revenue gaps, where we pinpoint possible revenue or profit gaps and their likely causes. And then we also help to clarify priorities, where we leave with a clear view of where to focus first for the greatest impact. So that's for the first 10 signups that we have today. And that's a focused commercial conversation that is entirely on your business only. And that's a private session. No one else is joining. But you're able to join, to invite team members into that session. Now, I'd like to open up the floor for questions. And before I do so, we have also received some questions beforehand where people have reached out through LinkedIn or an email. And some of the most common questions that we're getting is, how do I know if my business actually has a revenue leak? Especially if we're already busy or hitting our revenue targets. Then questions that we're getting is, once I've identified a revenue leak, how do I know what to fix first? And is the program mainly for revenue managers, or would it also be useful for people in operations, sales, finance, or general management? And how practical is the program? Will we actually work on our own business, or is it mainly just a theory? And what should I realistically expect to have achieved by the end of the 12 weeks? In terms of how do I know if my business actually has a revenue leak, I can promise you every single business has revenue leaks. And it's those underlying leaks that often go identified. And if you're very busy, and that's something that we have covered throughout this session, is taking a look at every single segment, at every single area that you're optimizing, at the systems and the health checks. And that's what we will help you to work through, is how do you identify those revenue leaks? And I don't know how much revenue your business is producing, but just imagine for every 1% that you can generate more, just do that math, how big of an impact that is to your business. And every business that we have touched so far at least had a double-digit profitability growth. And then we will help you that once you have identified that revenue leak, we will help you to set the priorities and what to fix first. But we also provide you the tool on how to get the people on board, because a lot of times revenue leaks have bottlenecks because of the way departments work, and departments do not work cohesively with one another. And that's also what we help you to fix. The program is not only for revenue managers, it is for anyone in operations, in sales, in finance, and also for general managers. It's for business owners, it is for asset managers. It's anybody can benefit from it, and you will be asked to, you will be able to achieve, you will be able to ask better questions after, but you will also be able to really peel back the onion, that then also when your team comes to present you with something, that you're really able to help guide them into the right directions. The program is very practical, and you will work on your own business. And it's not only theory, and that's really what we made sure, is that we don't want to have another theoretical masterclass. We want to make sure that you have practical tools. We want to make sure that you can engage with the community. We want to make sure that you can really share the success stories with everybody, and that you will be able to ask questions. And then we can provide that guideline. And then what should I realistically expect to have achieved by the end of the 12 weeks is then where you have a better understanding on how to take your entire team onto the journey. You will be able to spot these revenue leaks. You will be able to identify profitability opportunities, and you will be taking a different look at revenue optimization after this 12-week masterclass. And you will be taking on more the owner's hat, that as if it was your business. And based on this 12 weeks masterclass, you can even apply things based on your own items that you manage on a day-to-day perspective. So let's take a look if we have received any more questions. We have uploaded the PDF that you can download, and then we have also put into the chat on how to register. And then we'll see, are there any questions from anyone? You can also not just put them in the chat, but you can also unmute your phone, and then you can ask the questions. I can't see the individuals at the moment because I've got the presentation up. Okay, great. Then in terms of the asset revenue pathway, it's then also what we want to make available today is the early bird did expire at the end of July. But then if you do register by the end of this week, then we will honor the early bird rate, which is $1,500 per delegate. It's a really good investment into yourself, even if your company is not going to fund that. And then if you take $1,500 divided by 365 days into your own investment, that's a $4 investment, or it's a cup of coffee. Just then also to put things into perspective. And that is something that I have benefited from probably the last 10 years, is where I've invested into myself. But I've really regretted prior to that, early on in my early career, where I did not invest enough into, my own growth. I always waited for the company to actually pay for it. But if there are any questions from your HR department, that anyone, would like to know more about what this is, it's also something we do have group rates available for if it's more than just one person from a company that would like to join. And then you can register on the blackcoralcommunity.com. And you can also send us questions to info@blackcoralconsulting. You can reach out on LinkedIn or directly to my email. All my contact details are also available on that. So it's Judith@blackcoralconsulting.com, and my WhatsApp number, and then also our website. And if there aren't any questions, then I would like to thank the participants for joining. It's been great to see so many familiar faces, and I appreciate the time that everyone has made available in their busy day. And I hope that you did get some value out of this session, and download the self audit to see if you do find some of the revenue gaps. Thank you very much, everyone.
Thank you very much, Judith.
Thank you. Bye-bye.